Listen closely. Euro to US dollar is dangling at 1.1500 right now, and the entire street is leaning one way. You can feel it in the order flow, you can see it in the COT data, and you can hear it in the analyst notes. Everyone is short. BofA just came out saying the euro faces further downside. The market is pricing in a hot US CPI tomorrow. And yet, right here, right now, there's a trap that could liquidate thousands of late shorts in a single 5-minute candle. There is one danger zone and one hidden opportunity. I'm going to show you both. Stay to the end, because I'm giving you 3 exact levels you can trade tomorrow, complete with entries, stops, and risk-reward ratios you can screenshot. Write this number down. 1.1618. That is the line in the sand for the entire bearish structure on euro to US dollar. This morning's session bias is bearish, and we are fading any rips into supply. We have a strong sell trend on the weekly, strong sell on the daily, strong sell on the 4H, and only the 1H chart is trying to stabilize into a neutral coil. So the path of least resistance is down, but that only holds as long as we stay below 1.1618. A 4H close above that number and the whole downtrend resets. It would mean buyers have absorbed weeks of selling pressure and the sentiment flip is real. The herd is positioned maximum short into 1.1500, with massive put gamma sitting right at the psychological strike. That creates an imbalance. If 1.1500 breaks, the gamma accelerates the move lower and you get a free fall. If it holds, those puts become a trampoline and we could rip 80 to 100 pips in a heartbeat. The trap is set, and you now know the one level that springs it. Let's walk the charts, from the weekly all the way down to the 60-minute, and I'm going to show you why this is one of the cleanest bearish alignment moments we've had in months. On the weekly, the trend is a strong sell. Price is below the 20-week, the 60-week, and the 200-week moving averages. The 200-week is way up near 1.18. But the bearish cross of the 20 below the 63 weeks ago is still pumping downside pressure into the structure. This isn't some small correction. This is a macro trend shift driven by yield differentials, and I'll connect those dots shortly. Drop to the daily chart, and it's a graveyard. Euro to US dollar today at 1.1500 is trading underneath every single major daily moving average. The 200-day moving average at 1.1588, which held as support in April, has now rolled into resistance. The 20-day is at 1.1604 and descending. The 50-day is at 1.1651, the 100-day at 1.1661, and they are all pointing lower. This is a textbook bearish alignment, what we call a death cross cocktail. Daily RSI sits at 39.38, not oversold, which means there's still room to fall. MACD is printing negative at -0.004 and the histogram is widening to the downside, with no hint of divergence yet. Momentum is accelerating, not slowing. Now come down to the 4H, and the picture gets even more violent. We have a strong sell trend. ADX at 26 confirming trend strength. Price is below all key 4H MAs. And the 4H20 period is acting as dynamic resistance right around the daily pivot at 1.1547. Every attempt to pop above that level has been smacked down within hours. Here's what most traders miss, though. While the higher timeframes are screaming lower, the 1H chart is painting a neutral structure. Stochastics have dipped to 24.9, deeply oversold, and we are seeing a minor recovery attempt off the 1.1500 figure. This is the kind of setup that lures early sellers to short into the hole and get trapped, while the market first mean reverts to refuel. The most dangerous place to be is a fresh short right at 1.1500 without a clear breakdown. The hidden opportunity is to wait for that bounce into resistance and then strike. Let me give you the exact numbers. Support levels. The immediate line is 1.1516, but that's minor. The real support floor is 1.1496, followed by the weekly S3 at 1.1465. That 1.1465 is a volume node from early May, and it's the next big liquidity pull. Resistance. The pivot at 1.1547, then 1.1567, and the critical zone is 1.1598 to 1.1618. That resistance cluster is reinforced by the 200-day moving average and the previous breakdown level. As long as we remain below 1.1618 on a daily closing basis, the bearish structure is unbroken and every rally is a selling opportunity. Now let's connect the dots to what's driving this, because pure technicals without context are just lines on a screen. Yesterday, Bank of America released a note saying the euro faces further downside as Fed repricing risk grows. That one line changed the intraday trajectory because a hit at the core of what's happening. The market is aggressively repricing the Fed's path. Strong US data, services PMI, labor market, consumer spending, have all pushed rate cut expectations further out. The 2-year yield spread between the US and Germany is now around 190 basis points in favor of the dollar, the widest since March. That's a capital vacuum sucking euros into dollars. Meanwhile, the ECB schnabel sounded cautious, but the damage is done. Real yield differentials are crushing the euro and will continue to do so unless European data dramatically surprises to the upside. And then, tomorrow, we have US CPI. That's the fuse. The consensus is a hot print. If CPI comes in at or above expectations, this 1.1500 level will likely break and will target 1.1465 and then 1.1430 in a matter of hours. But here's the counter-narrative. The market is priced so aggressively for a hot number that a soft print could ignite a savage short squeeze. Under that scenario, euro to US dollar could spike through 1.1618 and reach for 1.1700 before anyone catches their breath. My 1 to 2 week directional lean is bearish while below 1.1618, but I'm staying nimble into the data. The event that invalidates everything is a daily close above that level. That's the pivot where bears must surrender. Let me ask you directly, do you think the dollar breaks 105 this week? Comment yes or no right now. I'm tracking consensus in real time and I'll shout out the majority view in tomorrow's video. Most people skip this section. They watch the analysis, they nod, and they scroll away. That's exactly where the money is made, in the execution. Keep watching, because I'm about to hand you 3 trade plans with exact entries, stops, targets, and invalidation rules, each with its own risk profile. You can screenshot every single one. Strategy 1, I call the sniper. This is the conservative, high probability approach that waits for confirmation. We want to short euro to US dollar on a pullback into the 4H supply zone. Specifically, we are looking for a bounce to the 1.1547 to 1.1567 resistance area, followed by a 1H close back below 1.1516. That gives us a rejection candle and a break of the nearest support, confirming the resumption of the trend. Entry on that 1H close below 1.1516, with a stop loss placed at 1.1590, just above the 200-day moving average at 1.1588 and the R1 resistance cluster. That gives us a logical place where the trade idea is wrong. Take profit 1 is 1.1496 for a quick scalp. Take profit 2 is 1.1465, the structural low and weekly S3. Risk reward on the full move is roughly 1 minute and 2.8 seconds. The entire setup is void if we get a 4H close above 1.1618. If that happens, the sniper stands down to the sniper, conservative, entry. 1.1516 on 1H close below after bounce to 1.1547, 1.1567 stop loss. 1.1590 take profit 1. 1.1496 take profit 2, 1. 1465 risk, air reward. 1:2.8 R invalidation. Void if 4H close above 1.1618. Strategy 2 is the active trader. This is for those who don't want to wait for a deep pullback and are ready to ride a clean break of the 1.1500 psychological magnet. We watch the 15-minute chart for a close below 1.1500, then a retest of that level as new resistance, with a bearish engulfing candle confirming the flip. Entry at 1.1498, just after the retest. Stop loss goes at 1.1525. above the -1.1516 support turned resistance, keeping the risk tight. Take profit 1 is 1.1465, matching the structural low, and take profit 2 is 1.1440, an extension target. Once TP1 is hit, immediately move the stop to break even. Risk reward on the full plan is 1 minute and 2.4 seconds. This setup plays the gamma acceleration below 1.1500. Invalidation. Any 1H close back above 1.1516 tells you the breakout was false and you exit the active trader, standard, entry. 1.1498 on 15M retest of 1.1500 with bearish engulfing stop loss. 1.1525 take profit 1. 1.1465 take profit 2. 1.1440 risk, reward. 1:2.4 are invalidation. 1H close above 1.1516. Type your euro to US dollar range for tomorrow in the comments right now. Give me the high and the low you're watching. Let's see who's aligned with the structure and who's about to get caught. Strategy 3 is the aggressor. This one is high risk, high adrenaline, and strictly for those who can lose small and manage risk aggressively. If you're looking to front-run the CPI break or trade momentum during the data itself, you set a sell stop order at 1.1492, just below the 1.1496 support and today's session low. If the floor gives way, you're in. Stop loss at 1.1520, above the 1.1516 pivot. Take profit 1 at 1.1465. Take profit 2 at 1.1430. The risk reward is around 1 minute and 2.2 seconds. This trade relies on momentum and speed. If price touches 1.1492 and then stalls or reverses, you exit immediately, no hesitation. Invalidation is a 1H close back above 1.1520. Only play this if you accept that the stop might get hit in a whipsaw, and never size big. This is a scalpel, not a sledgehammer to the aggressor. High risk, entry. Sell stop 1.1492 stop loss. 1.1520 take profit 1. 1.1465 take profit 2. 1.1430 risk, reward. 1:2.2 are invalidation. 1H close above 1.1520 now, a quick risk pulse. Never risk more than 1 to 2% per trade. No positions through high-impact news like CPI, unless you're using the aggressor plan with zero size and full acceptance of the outcome. Stops are non-negotiable. The difference between a consistent trader and a blown account is often one missed stop. This is how you survive to trade the next big move, so let's bring it all together. The single most critical level for the next session is 1.1500. A daily close below it opens the trapdoor toward 1.1465 and then 1.1430. But if that level holds, and especially if CPI disappoints the dollar bulls, we could see a vicious squeeze that rips through 1.1618 and changes the entire conversation. Tomorrow's wildcard is the CPI print at 8:30 a.m. New York. I'll be breaking down the number live, mapping it directly onto these levels, and showing you how to adjust in real time. If you want the full breakdown on Bitcoin and the S&P divergence, that video is live right now. Tap the end screen to continue the flow. Smash like if this gave you a clear plan. Subscribe, hit the bell, and I'll see you in the next one before the next explosive move.